You think you need to be right to win, but the truth is, your obsession with being right is what's destroying your account. Have you ever stared at a chart, convinced you knew where the market was going, only to watch it rip through your position like your opinion meant nothing? That's not just a mistake. That's your ego playing the game, not your trading plan. The traders Jack Schwager interviews in Market Wizards didn't get to where they are by being right all the time. In fact, many of them admit to being wrong often. The difference? They didn't need to be right. They needed to be aligned with reality, fast. Take Paul Tudor Jones. One of his most powerful lessons: losers, average losers. He's not trying to be right. He's trying to survive and thrive. The moment he knows he's wrong, he cuts. No negotiation, no prayer. Now compare that to your last blown trade. Did you add to it? Move the stop? Justify it with some news you read on Twitter? That's the psychology Schwager reveals. Traders fail because they'd rather defend their ego than their equity. What if instead you assumed every trade was wrong until proven right? What if your job wasn't to be right, but to manage your risk like your account depended on it? Because it does? Every wizard in this book, from Ed Sykota to Michael Marcus, shows you that profitability isn't about a high win rate. Sykota once said, "Win or lose, everybody gets what they want out of the market." Read that again. If you want to be right more than you want to be profitable, that's what you'll get: temporary validation, long-term losses. If you want to be the hero, the prophet, the genius, you'll end up as a cautionary tale. You need to shift your identity. Right now, you might see yourself as a smart analyst, someone who understands the market. But the wizards didn't become legends by understanding. They became legends by acting on what the market gave them, not what they wanted from it. The difference between analysis and execution is night and day. Here's the wake-up call. Your edge doesn't come from accuracy. It comes from the ability to lose well. That's the bitter medicine traders refuse to take. It's also why most fail. They can't accept being wrong. But being wrong is the most common state you'll live in as a trader. You're just renting profits in this game, never owning them. Ask yourself this: what's more painful, being wrong or losing money? If the answer is being wrong, you've already lost. Because that emotional bias is going to sabotage your risk management every time. You'll hold losers and cut winners. You'll justify instead of act. You'll cling instead of let go. The market wizards show you that the most dangerous trait in trading is the need to be right. If you build a process around humility, your equity curve will thank you. If you build it around pride, the market will crush you. No exceptions. So where do you start? Start by tracking every trade, not just the result, but your intention, your reasoning, your emotional state. Be brutal with yourself. Study your trades like Schwager studied these wizards. Find your patterns of self-sabotage and root them out. Because you're not just trading a market, you're trading your own psychology. You don't need to be right. You need to stay alive. You need to stay flexible. And you need to fall in love with the process, not the prediction. That's the difference between traders who fade away and traders who make history. You believe trading is about predicting the future, but the wizards prove it's about managing risk and probability, not prophecy. That might feel like a letdown, especially if you've spent years obsessing over forecasts, indicators, and market calls. But here's the truth. If prediction worked, all analysts would be billionaires. They're not. Because in real trading, edge doesn't come from being right. It comes from what you do when you're wrong. Ask yourself, what if your job wasn't to forecast the next candle, but to respond to it? What if trading was about preparing for possibilities, not predicting certainties? That's how the market wizards operate. They don't pretend to know what's going to happen. They build systems, rules, and habits around what they'll do if something happens. It's contingency thinking, not clairvoyance. Bruce Kovner, one of the featured traders, said it best: "I know where I'm getting out before I get in." That means the outcome doesn't control him. The plan does. When you're trying to predict, you get attached to an outcome. You need to be right. But when you prepare for different outcomes, you remain in control. You aren't married to the market. You're in a flexible partnership. That's the mental shift Schwager spotlights in every interview. The best traders think like risk managers, not prophets. They size their trades according to volatility, not confidence. They let go of ego and they embrace statistics. And most importantly, They understand that no one trade matters. It's the series that counts. Imagine how differently you'd trade if you truly believed that. You wouldn't chase. You wouldn't force setups. You wouldn't let a single loser shake your foundation, because you'd understand that one loss means nothing in a sample size of 100. This is what Mark Douglas calls thinking in probabilities, and it echoes throughout Market Wizards. The traders who thrive are the ones who understand variance and work with it, not against it. Your problem isn't your strategy, it's your expectations. You're expecting consistency in a game of chaos. But what the wizards teach you is that the market doesn't reward the smartest. It rewards the most prepared. Those who respond, not react. Those who manage outcomes, not chase predictions. Now think back to your last few trades. Were you reacting to the market or trying to impose your will on it? Were you letting the price tell you what's next, or were you hoping it would prove you right? The market wizards show that trading gets easier when you stop trying to be the smartest person in the room and start being the most disciplined. Even Richard Dennis, the legendary trend follower and founder of the Turtle Traders, didn't rely on prediction. He relied on process. He taught complete novices to trade trends not by telling them what would happen, but by teaching them to follow rules with unshakable discipline. His success wasn't in the system. It was in surrendering to it. You have to kill the fantasy that you'll ever know what comes next. Schwager's book drives this home again and again. Whether it's Jim Rogers writing global macro trends or Tom Baldwin dominating the bond pit, their success came from respecting uncertainty, not trying to eliminate it. So here's your job now. Stop asking, where is the market going? Start asking, what will I do if it goes here? What if it goes there? Create plans, not predictions. Build if-then structures. Define your entries and exits. Use stops that are placed not based on emotion, but on logic and volatility. The market wizards weren't magical. They were pragmatic. They had the courage to let go of control and focus on what they could control. You can do the same. Trade the reaction, not the forecast. Trade the edge, not the feeling. That's how you win. You've read the theories and learned the indicators. Yet without iron discipline, you're no closer to consistent profitability. Discipline isn't optional in trading. It's the foundation, the safety net, and the difference between luck and longevity. What Schwager uncovers through his interviews in Market Wizards is that even the most brilliant traders would be bankrupt without discipline. Intelligence is an advantage, but without control, it becomes a liability. Consider Marty Schwartz, the legendary short-term trader. He made millions by doing one thing exceptionally well, following his rules. He said, "I always laugh at people who say, 'I've never met a rich technician.' I love that. It's such an arrogant, nonsensical response. I used fundamentals for 9 years and got rich as a technician." His success wasn't just about charts. It was about obeying them, even when it hurt. Have you ever seen a perfect setup and jumped in early, thinking you'd outsmart the market? Or skipped your stop because this time feels different? That's not strategy. That's sabotage. The market wizards repeatedly emphasize that undisciplined traders get punished. Not sometimes, every time. You need rules, not guidelines, not preferences. Hard rules, non-negotiable commands that protect you from your own impulses. Rules that tell you when to enter, when to get out, and how much to risk. And then, the hard part, you follow them even when your gut screams the opposite. Michael Marcus, who turned $30,000 into $80 million, admitted that his biggest losses came not from bad analysis, but from breaking his own rules. You don't lose because of the market. You lose because you betray your own process. The real enemy isn't volatility, it's inconsistency. The difference between amateurs and professionals? Amateurs do what feels good. Professionals do what works. That's what Schwager exposes. These traders built routines, checklists, and strict systems around their decision-making. Why? Because discipline is the only edge you can actually control. You can't control the market. You can't control the news, but you can control your actions. And here's the brutal truth. Discipline doesn't mean you'll always win. It means you'll always survive. When your system tells you to get out, and you do it, even on a losing streak, that's discipline. When you size down after a big win because you don't want to get cocky, that's discipline. It's not glamorous. It's not exciting. But it's how traders like Tony Saliba lasted through market storms while others got wiped out. Think of it like a muscle. The more you use it, the stronger it gets. But skip your rules once and you've torn the fiber. You'll rationalize, you'll compromise, and soon your trading becomes roulette. That's why Schwager's subjects don't treat rules as suggestions. They treat them as sacred. You might think freedom is what attracted you to trading. No boss, no schedule, just you and the screen. But true freedom comes from the structure you build. Rules liberate you from emotional chaos. They make your trading life simpler, not stricter. Because once the decision is rule-based, emotion loses its grip. Start by identifying your weak points. Where do you most often break discipline? Late entries? Overtrading? Revenge trades? Write them down. Make rules that preempt those behaviors. Then track them. Hold yourself accountable the way a fund manager would. And when you fail, and you will, review, not regret. The market wizards aren't robots. They've broken rules too. But they learned, adapted, and rebuilt stronger frameworks. Discipline isn't perfection. It's commitment. This is your invitation to change. Build your rules. Trust your rules. Obey your rules. Because in trading, discipline isn't the goal. It's the gateway. You're placing trades with no defined stop, while the best traders treat capital preservation like oxygen. You might think trading is about making money, but ask any market wizard and you'll hear the same truth. It's about not losing it. Risk management isn't a feature. It's the entire operating system. Without it, your career has an expiration date. Paul Tudor Jones once said, "Don't focus on making money. Focus on protecting what you have." That mindset isn't optional. It's essential. These traders survived not because they were fearless, but because they were terrified of losses. They respected risk to the point of obsession. That's the paradox. The more you fear losing, the more likely you are to keep winning. Let's be real. You've probably had days where one bad trade unraveled weeks of progress. You doubled down. You widened your stop. You hoped, and then the market punished you. Why? Because hope is not a hedge. The market wizards knew this. They knew that the single most important thing in trading is staying in the game. And you can't do that if you blow up your account chasing one more chance to be right. Risk management isn't just about stops. It's about position sizing, diversification, correlation, and scenario planning. It's about knowing before the trade how much you're willing to lose and being at peace with that. Think about Bruce Kovner again. He said, "Risk management is the most important thing to be well understood." He sized positions so he could be wrong often and still come out ahead. That's edge. You're not trying to win every trade. You're trying to avoid losing too much on any trade. And that's a huge psychological shift because your brain wants certainty. It wants control. But the market offers neither. Your only control is how much you expose yourself to risk and when to walk away. Most traders blow up not because they're wrong, but because they're wrong big. The difference between a drawdown and a disaster is risk. That's why market wizards use stops religiously. They treat every trade as guilty until proven innocent. And the moment the market proves them wrong, they're out. No prayer, no paralysis, just action. How many times have you widened your stop instead of taking the loss? How many times have you told yourself, it'll come back? That mindset is toxic. Schwager's interviews drive this point home again and again. The traders who last are the ones who respect their capital more than their opinion. Risk is the one constant in trading. You can't eliminate it, but you can structure it. Build a maximum daily loss. Limit your exposure per position. Cap your leverage, and never let a single trade threaten your survival. These rules aren't for bad days, they're for every day. Because every day has the potential to become a bad day. And here's the secret most traders miss. Controlling risk frees you. When you know your downside is protected, you can execute your plan without fear. You can trade with clarity. You can make bold moves because you've already defined the worst-case scenario. You think trading is about courage. It is. But real courage isn't holding a loser. It's cutting it. Real courage is walking away, resetting, and coming back with a plan. That's what the market wizards do. That's what you need to do. So make risk your priority. Build your strategy around it. And never, ever let a single trade have the power to take you out of the game. Because the traders who win big are the ones who survive longest. You cling to one strategy. Meanwhile, the market keeps changing, and the market wizards evolve with it or get left behind. The idea that one holy grail setup will always work is comforting, but it's a trap. Markets are dynamic, not static, and your strategy must be too. The traders and market wizards didn't just master one approach, they mastered the art of adaptation. Ed Seykota once said, "The elements of good trading are 1. Cutting losses, 2. Cutting losses, and 3. Cutting losses." But he also evolved his systems as the markets changed. His success wasn't about one perfect method. It was about refining, adjusting, and staying curious. He believed that systems don't fail. Traders do, by refusing to adapt them. You may think sticking to a single setup shows commitment, but stubbornness isn't strength. It's self-sabotage when the market shifts. Look at traders like Stanley Druckenmiller. He didn't cling to rigid rules. He flowed with macro trends, switched styles, and constantly reassessed his bias. He wasn't loyal to a setup, he was loyal to winning. So ask yourself, are you married to your method or to your outcomes? Because those two aren't always compatible. The market doesn't care what worked last month. It rewards those who adjust quickly. The best traders learn, test, discard, and improve. They're scientists in the lab, not priests at the altar. Adaptability is a mindset. It requires you to embrace uncertainty and stay humble. You may need to let go of your favorite indicator. You may need to switch timeframes. You may need to change how you size positions. The market wizards constantly did. They weren't chasing every trend, but they weren't rigid either. Bill Lipschutz, the currency king, adapted not just his strategies, but his behavior. When he realized his emotions were affecting performance, he built guardrails. When a trade wasn't working, he didn't justify it. He reevaluated. That kind of adaptability takes courage, but it also builds resilience. You're not a failure because your system stops working. You're only a failure if you keep using it out of nostalgia. The best traders retool in real time. They observe what the market is saying, not what they wish it would say. That's how they stay relevant. Now think about your last 10 trades. Did the market change and you didn't? Did you keep doing the same thing, expecting a different result? That's the definition of insanity and the death of your edge. If your system is built for trending markets, but we're in a chop, why are you still forcing breakouts? If volatility has changed, have you adjusted your stops? This is your wake-up call. The market isn't loyal to you, and you don't owe your strategy anything. You owe your trading future the ability to adapt. The market wizards survived because they evolved. Every new regime, interest rate changes, volatility cycles, geopolitical shocks, they absorbed, adjusted, and moved forward. Adaptation doesn't mean panic. It means planned flexibility. You need review cycles. You need journals. You need time to analyze your own performance and see if your approach still fits the market environment. And when it doesn't, you pivot. Think of yourself as a pilot. The flight plan may start one way, but if weather conditions change, you adjust altitude and course. The destination doesn't change, but how you get there must. So here's your challenge. Build adaptability into your trading DNA. Schedule strategy reviews. Journal environmental shifts. Ask better questions. What's changed? What's not working? What am I refusing to see? Because the market doesn't wait for you to catch up. It rewards those who stay ahead. Don't be the trader who clings while the current changes. Be the trader who sails. Adjust your sails. Check your compass and stay on course, not with rigidity, but with relentless adaptability. That's what the market wizards did. That's what you must do. You feel proud when you win, crushed when you lose, but the real pros feel nothing and let process lead over outcome. This is one of the hardest truths in trading. Your emotions aren't your edge, they're your liability. The market wizards knew that if they couldn't master their emotional state, they'd never master the market. Think about it. How many times have you gotten euphoric after a win, only to overtrade and give it all back? Or been shaken by a loss, then hesitated on the next setup that would have worked? That roller coaster of pride and panic is a sign you're outcome dependent. But the top traders in Schwager's book, they're emotionally flat, calm, focused, not because they don't feel, but because they don't act on those feelings. Take Tom Baldwin, one of the biggest bond traders on the Chicago floor. He traded enormous size and said that once a position was on, it became impersonal. No emotion, just execution. And execution, he believed, should be mechanical. That's not cold. It's wise. Emotion causes hesitation. Hesitation destroys edge. You're not trying to feel good. You're trying to trade well. And trading well means letting go of the scoreboard. Michael Steinhardt said he made money by being wrong fast, not by being right. That mindset only exists when ego is out of the room. Have you ever noticed how your best trades feel boring? That's the zone the wizards talk about. The trade just fits. You follow your plan. You execute cleanly. There's no adrenaline spike, no fear, no elation. That's emotional mastery, and it's earned. It's also strategic. When you become emotionally reactive, you lose your ability to assess risk. You revenge trade. You avoid entries. You doubt exits. You contort your strategy to avoid discomfort. But if you want to last in this game, you need to detach emotionally and engage systematically. This isn't about becoming numb. It's about becoming professional. Athletes train to control nerves. Pilots train for turbulence. Traders must train for emotional spikes, both wins and losses. And you do that by building routines, reviewing behaviors, and holding yourself to performance standards. Mark Cook, one of Schwager's interviewees, kept a meticulous log, not just of trades, but of emotions. He tracked his mindset as aggressively as his results. Why? Because he knew that mindset directly impacted execution. He knew that when his confidence drifted too high or too low, his edge vanished. So what can you do? Start journaling not just your entries and exits, but your emotions around them. Did you feel greedy? Hesitant? Rushed? Were you trading to make money or to avoid feeling like a failure? The more you understand your emotional patterns, the more you can design systems that protect you from yourself. Also, create rituals that reset your mindset. Walk away after a loss. Meditate before the open. Review your edge at the start of every session. Build emotional habits just like you build technical skills. Because when the pressure's on, your habits will save you. Your feelings won't. The market wizards had emotions, but they didn't let emotions have them. That's the difference. And it's one you must learn if you want to win long term. Detach from the result. Attach to the process. Trade the plan. Trust the numbers. Let go of the drama. Because in trading, the more boring your execution feels, the more consistent your results become. You're looking for the Holy Grail system, but the truth is, systems don't work unless they match your psychology. That's the lesson the market wizards deliver with brutal clarity. You can have the best indicators, the cleanest backtests, the most optimized rules, but if the system doesn't align with who you are, it will fail you. Or worse, you'll fail yourself trying to follow it. Richard Dennis trained the turtle traders using a mechanical trend-following system. Some of his students thrived, others didn't. Why? Same rules, same market, different minds. Because trading systems aren't one-size-fits-all. They're more like tailored suits. What fits one trader perfectly suffocates another. Have you ever tried to copy someone else's strategy only to fall apart after a losing streak? That's not a system flaw. That's a psychology mismatch. Your trading system must be one you can execute consistently, not just in profit, but in pain, especially in pain. Michael Marcus figured this out early. He realized he could never be a purely mechanical trader. He needed discretion. So he built a hybrid system that gave him flexibility within rules. And it worked, because it worked for him. The system served his temperament, not the other way around. What about you? Do you like rapid action or slow setups? Do you need rules that limit your impulses or frameworks that give you creative room? The market wizards didn't all trade the same way. Some were systematic, others discretionary. Some focused on technicals, others fundamentals. What united them wasn't how they traded. It was that their method was a reflection of their mindset. This is the part most traders skip. They chase systems instead of building self-awareness. They look for plug-and-play strategies when what they really need is internal alignment. Trading becomes sustainable when your method fits your psychology like a second skin. Ask yourself these questions. Can you take 5 losses in a row without quitting? Can you sit through hours of boredom without forcing trades? Can you follow rules to the letter, or do you need a system that bends with market nuance? Your answers define the system you should trade, not a PDF you bought from a guru. Ray Dalio built a macro empire on systematic principles, but he constantly stress-tested them. He didn't just test numbers, he tested behaviors. Could his traders stick to the system under pressure? Could they trust it when it didn't feel right? That's what you must test too. Backtesting is necessary, but it's not enough. You must forward test with you in the loop. Simulate pressure, log emotional reactions, track adherence, not just results. Because a great system that you can't follow is worse than an average one that you execute flawlessly. Your job isn't to find the perfect system. It's to build a robust one that matches your flaws, not just your strengths. A system that survives your worst day, not just your best setup. That's what the market wizards understood. Systems aren't holy grails. They're tools. They're machines powered by your discipline, your mindset, and your self-control. The better the fit, the more seamless the execution. And when execution becomes automatic, that's when real edge appears. So stop searching for the system. Start designing your system, one that fits your psychology, complements your instincts, and protects your weaknesses. Because when the system and the trader are in sync, consistency follows. You think confidence is about feeling strong, but it's about quiet certainty rooted in tested process and humility. That's the paradox that the market wizards understand. Confidence in trading doesn't come from winning trades. It comes from surviving losing streaks without losing your mind. It's a product of preparation, not prediction. Most traders confuse ego with confidence. They win 3 trades in a row and think they're invincible. Then the market humbles them, and they spiral. That's not confidence. That's emotional leverage, and it's deadly. Real confidence is built brick by brick, trade by trade. It's earned by sticking to your rules when it hurts. It's earned by walking away after a loss and not needing to make it back immediately. It's not flashy. It's not loud. It's quiet, firm, and unshakable. Consider Bruce Kovner again. He once said, "I'm always thinking that losing money is part of the game, and I can handle it." That's true confidence. Resilient, not reckless. The market wizards didn't need to boast because their results spoke louder than their emotions ever could. You might be chasing the feeling of confidence, but what you really need is evidence. Evidence that your process works. Evidence that you can handle pressure. Evidence that you followed your edge through wins and losses. That's how confidence is constructed, through aligned behavior over time. And here's the crucial piece. Confidence without ego means you remain coachable. The moment you think you've mastered the market, it's already beating you. Confidence rooted in humility means you keep learning. You refine, you question, you evolve. That's what kept the market wizards sharp for decades. Mark Minervini, one of Schwager's later interviewees, embodies this. He combines razor-sharp confidence with meticulous study and self-review. He doesn't trade to prove himself. He trades to execute a plan. When he's wrong, he adjusts. No drama, no denial, just action. You've probably had moments where you felt invincible, right before your worst drawdown. That's the ego trap. It blinds you. But the wizards let performance, not emotion, guide their confidence. They don't feel ready. They know they're prepared. So how do you build that kind of confidence? You build a repeatable process. You journal religiously. You track stats. You review mistakes without self-hate. You test your system until you trust it. And then you trust yourself to follow it. This is the long game. Confidence doesn't spike. It compounds. Every time you respect your risk, every time you stick to your size, every time you cut a loser, you're depositing into your confidence account. And that account protects you when chaos hits. Don't aim to feel confident. Aim to be consistent. Confidence will follow. Let humility be your anchor. Let evidence be your compass. Because when confidence and humility walk side by side, that's when you trade like a wizard. You want to avoid pain in your journey, but every market wizard had to break down before they broke through. The path to trading mastery isn't linear. It's brutal. It's full of doubt, humiliation, and failure. And that's not just normal. It's required. Because pain is the price of evolution in this game. Jack Schwager's interviews expose one universal truth. Every top trader has been wrecked at some point. Not a little drawdown. Not a minor dip. A full-on reckoning. Margin calls. Identity crises. Losing everything and rebuilding from zero. These aren't side notes in their stories. They're the turning points. Take Michael Marcus. Before he made millions, he lost nearly everything multiple times. He blew up accounts. He questioned whether he had what it took. But he didn't quit. He adapted. He learned from the pain. And that pain became his edge. You're going to lose. You're going to second guess yourself. You're going to feel like the market hates you. And that's where most traders quit. But the market wizards kept going, not because they were immune to pain, but because they respected it. They saw losses as tuition, as feedback, as necessary fuel. Have you ever taken a huge hit and felt paralyzed? That's not a failure. That's a fork in the road. You either fall into a spiral of regret, or you analyze, regroup, and return sharper. The market wizards all chose the latter. And not just once, over and over. Tom Baldwin had days where he lost more in a session than most people make in years. But he came back because he used those days as data, not drama. Paul Tudor Jones once said, "I love trading losses, not because he enjoyed the hit, but because he knew every loss made him stronger." You can't shortcut this process. The biggest jumps in your growth curve will come right after your biggest face plants. That's when you get honest. That's when you change. That's when you drop the excuses and pick up the process. So how do you survive the pain? First, expect it. Don't be surprised when it shows up. Build systems to absorb it. Position sizing, stop losses, emotional breaks. Second, study it. Journal every major mistake. Break down your worst trades. Ask why you really broke your rules. Third, forgive yourself. Shame kills more traders than bad strategy. The market wizards weren't flawless. They just refused to let failure define them. They turned breakdowns into breakthroughs by staying committed to the craft. Look back on your journey. What were your most painful trading moments? Have you extracted the lessons, or are you still carrying the scars? Pain is a powerful teacher, but only if you listen. Every setback you face is secretly asking, will you rise or will you retreat? The market wizards rose. They stumbled, they suffered, but they never surrendered. That's why their names are in the book, and why yours can be too. Trading isn't about avoiding pain. It's about becoming anti-fragile, stronger with every hit. If you can embrace that, you're not just trading anymore. You're transforming. You think there's a finish line, but the wizards show that mastery is a constant evolution, not a final achievement. The moment you think you've made it in trading, you've already started to decline. Because markets change, and so must you. That's the unwritten rule that echoes through every chapter of Market Wizards. These traders weren't chasing trophies. They were chasing truth. They were addicted to learning, not winning. That's why they endured. Because they saw trading not as a goal, but as a craft, a calling, a mirror reflecting their own personal evolution. Look at Stanley Druckenmiller. Even after managing billions, he constantly sought new insights, challenged his views, and stayed humble to the changing macro landscape. He wasn't satisfied with being great yesterday. He was obsessed with staying sharp today. Or Ed Seykota, who viewed trading as an extension of personal growth. He famously said, "Everybody gets what they want out of the market." For him, trading wasn't about beating others. It was about becoming more of who he was. That mindset kept him growing, even after decades of success. You might think that mastery means certainty, but in trading, mastery is the ability to live with uncertainty, to thrive in ambiguity, to evolve through discomfort. Every market wizard embraced this truth. They weren't static, they were fluid. They reinvented themselves constantly, because they had to. You must do the same. Stop treating trading like a destination. There's no final level, no "I've figured it out" moment. There's only the next day, the next setup, the next evolution. That's the beauty of this game. It rewards growth, not arrival. That's why journaling matters. That's why reviews matter. That's why reflection matters, because they keep you in dialogue with yourself. They keep you honest. And they remind you that this game is never over. Only continued. What's your next evolution? Is it mastering patience? Refining your edge? Taming your risk? Strengthening your psychology? There's always another layer, another weakness to expose, another level of discipline to build. The market wizards kept growing long after they were rich, because growth was the reward. And it can be for you too, but only if you surrender the fantasy of arrival. You'll never reach the top, but you can keep climbing. This is your path now, a journey, not a destination, a practice, not a performance, a lifestyle, not a lottery. You are a trader, not a predictor, not a gambler, not a showman. And every day you choose growth over ego, process over outcome, humility over bravado, you become more of a wizard. So lace up, show up, evolve, because the game doesn't end, it just changes. And so must you. You've just walked through the minds and methods of the greatest traders in modern history. And if you're still here, it's because you feel that fire. The market wizards didn't succeed because they were smarter or luckier. They succeeded because they mastered themselves. Their stories are your roadmap. Their struggles mirror your own. This journey taught you that being right isn't the goal, survival is. That prediction is a trap, and adaptability is your edge. That discipline beats brilliance, and that your biggest losses will birth your biggest growth, if you let them. You've learned that systems must fit your psychology, and that real confidence grows from consistency, not emotion. Most of all, you now understand. There is no finish line, only the next trade, the next test, the next transformation. So here's your call to action. Pick one part of this that shook you. Rewatch it, reread it, then apply it today. Don't just consume this wisdom, live it. Because trading doesn't reward intention, it rewards execution. If this lit something inside you, like, comment, and subscribe. Share this with a trader who needs the truth. And remember, becoming a market wizard isn't about arrival. It's about who you become on the journey.